a silent scream. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I haven't met. I've been down where the doubt is loud. I've been lost in the digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantees, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway. Late night glow from a silent screen. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I have. I've been down with it loud. I've been lost in a digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantee, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway.
We go. All right, legends. Hope you're all having a fantastic day. It is Thursday today. According to my trading journal, Thursdays are my most profitable days. So maybe there's some nice trading opportunities that's going to show its face today. I am ready. I'm already in a short. I've taken profits here to the downside. You know, I've kept the community up to date. We had a look at a couple of things yesterday, and for those of you, I'm sure a lot of people here on the live stream are already inside of the community. Okay, that's where myself and Andy provide all the updates. We have coaches that looks at altcoins. We have researchers that do fundamental and that research and share news around, you know, what's happening in X and so forth. But now, guys, ladies and gentlemen, because I know there's ladies here in this live stream as well. So, you know, I mustn't just say guys, I must say, ladies and gentlemen, we have some very successful lady traders inside of our community as well. And if you're not part of the community, DM me the word access. It's the first link down in the description. My Telegram link is there. Okay, DM me the word access if you want access to the community, and I'll send you instructions on how to join. The most important thing, okay, I'm going to start easy today with the technical analysis. We're going to look at support, resistance, value area, volume, okay, before we dive into Elliott wave theory, where where things becomes a little bit more technical. But for the bulls, I think it's very important that we hold this level, okay? Well, let me break it down. Most important level is this level over here, and that is basically this high. The bulls really need to defend this high to find upwards momentum again. If we lose this high, it starts looking a little bit bad. But, as long as we don't get acceptance back inside of the range. So as long as price can stay above the range, there's a chance maybe we break out, we reject again. Okay, as long as we can stay above the range, we have a chance for the bulls to have still upwards momentum. As soon as price gets acceptance back inside of this range over here at around let's call it $70,000, just as a nice little round number. Okay, if price starts getting acceptance back inside of the range, well, then you have to bound. You guys can see, then you have the point of control. Okay, and usually when price loses the point of control 8 out of 10 times, okay, you take the low. So the bulls need to defend this level, and most importantly, you can see where the bulls are trying to defend at the moment is they are trying to hold this high. So from a breakout perspective, for the breakout traders out there, this is where you look for longs. Price has broken out, okay, and you want price to hold to claim the high again. So you know where to put your stop loss, you know where to build your position, you know where to take profits, and then you leave a runner to the upside. Okay, there is a very interesting level that I'm watching here, and I'll show you guys now when I dive into this structure. Okay, I'm going to spend a bit of time today just, discussing this little structure over here. I also want to discuss gold and oil. I want to look at gold and oil as well, because I'm going to start trading commodities. And on Bluffin and on BTCC, which are some of the links down in the description, you can trade these commodities. Okay, so I'm going to stick to a higher time frame analysis, 4-hour, 8-hour analysis, and it's going to be a swing trading mentality that I'm going to implement on those commodities when I trade them. Okay, Bitcoin for me is the day trading commodity, or the day trading asset. Sorry, the day trading asset. Okay, that is where I can zoom into the 15-minute. That's where I can zoom into the 5-minute and take those day trades. When I trade commodities, S&P 500, Nasdaq, I like to stick to high, swing trading mentality. You get into a trade and you most likely stay in there for a week or two. You take profits, you get out. Those positions will also be lower leverage, low position sizes. Okay, because swing trading is a different strategy all by itself. And guys, now that we've started, okay, just to give you a little bit of what can we expect, some of the critical levels that Bitcoin needs to hold is, great if the bulls can defend the high. Because as soon as you start getting acceptance back below the high, it already starts not looking so great. Then you have your next area of support above the highs. You can see how well this has been respected. Okay, reject. That's also where I entered a short. Okay, you come back up, reject. You come back up, you reject. And now we are above. So for the bulls to see continuation, this is the zone that needs to hold. You do not want to get acceptance back inside of this range. You will increase probabilities if price gets acceptance back inside of this range, okay, that maybe you bounce at the point of control, you reject again at the value area high, and you continue momentum to the downside. So the bulls have their work cut out for them if they want to see continuation here to the upside. One nice little interesting thing that I'm seeing here more locally, and I will dive into the 15-minute, even the 5-minute time frame now, is that an interesting thing that I'm observing over here is that for now, the structure does look more corrective. Okay, this is the zone that the bulls need to hold. You can see that price here dipped into the highs that found support over here. So this is a critical zone from a structural perspective. That is a critical zone that needs to hold. Okay, let me show you guys a little bit of education from a structural perspective. Okay, when you look at a structure like this, okay, let's take this out the way. And I can take the line out the way as well. Just from a structural perspective, when you look at this low to the high, as price was pumping here to the upside, it pumped and it consolidated. Okay, there's your first area of support. It pumps and it consolidates. And then you get a final push here to the upside. Usually, okay, now this is your impulse. Okay, usually what happens is if price and when price starts correcting, these are the two most important zones that I keep an eye on for a bounce. Because what usually happens is price either bounces in this zone. If it loses it, it usually retests it as resistance, okay, and it goes to the next zone. So there's usually two places where I look for a bounce when I see an impulse to the upside. It's either here, where it now got the bounce at the moment, or it's in this zone. So a structure usually gives me two opportunities to get back into a long trade, or a short, you know, if it falls to the downside. So just wanted to share that little bit of education. And now you can see where price got the bounce was literally at the highs of this little consolidation area. Okay, if price comes back down, okay, then you want the lows to hold over here. That's usually how I look at the structure. You sweep the lows, you grab the liquidity, you start trading above, and you move back to the upside. So quite an important zone. And right, guys, let me just put the music a little bit softer here in the background so it's not distracting to everyone. There we go. Remember to smash up that like button. Okay, and it looks like we could be getting ourselves a little bit of a breakout over here. Okay, it looks like it wants to stick its neck out. The only thing that, you know, I always have to be that bearer of bad news. The only thing I don't like about this little breakout, okay, yes, can it continue? Of course it can continue. The only thing I don't like is, and I think you can actually see it better on the 15-minute time frame, I do not like a breakout, okay, where the candle leaves a wick behind, the body closes below the trend, and it's the highest volume candle. I don't like to see that. Usually when I see that and I do attempt the trade, I will go in with way less capital. Because most often, 7 out of 10 times, what I have seen when I did my back testing, when you break out and you leave a wick behind and the body closes below the trend, and that is the highest volume candle, it creates a fake out. So it looks like it wants to go and it falls back down and it claims the low again. Yes, guys, there's always the chance that it gets continuation and goes and claims the high, and, you know, all great. But I just don't like to see that. Okay, I am actually way more interested in shorts where price is at the moment, okay, if it continues to the upside, than I am in longs at the moment, and I'll explain that from an Elliott wave perspective when I get there. Okay, so here is basically just where you execute your trading strategy. You have the D line, you get the breakout, that's where you enter, and you basically, okay, to keep it simple, what I would do in this instance is you targeting the highs, you know where to put your stop loss. Another thing that I don't like about this specific trade is that the risk to reward does not meet my minimum requirement. It's a 1.5 risk to reward. Okay, so I can only share, remember guys, as per the disclaimer, I can only share with you how I approach the markets. Please do not what I say influence your plan. You might have a different trading plan. You might have a different trading strategy that I don't even use. Some people use moving averages. I hate moving averages. I've tried it. Okay, I've tasted it. I've eaten it. I don't like them. Okay, I've tried moving averages. The only moving average that I use is the anchored VWAP and the and the normal daily VWAP, okay, this little bad boy over here, and I don't use it to trade, I use it to know where to take profits when I'm in a short or a long. That usually becomes my TP1 or my TP2 area zone. Okay, so right, so what I'm explaining to you here is how I would take this trade. Okay, is if the risk to reward does not make sense and I still consider taking the trade, instead of, for example, for me going in with 2% of my capital, I'll go in with 1% of my portfolio. The fact that I saw, okay, a wick left to the outside with the highest volume node here at the moment also is another tick for me to give the trade a lower confidence. So then I will go in with 0.0 with 0.5%. So can you guys see, depending on what I see, I know how much capital to deploy for this trade. Yes, it can play out. And then there's always that thing of, oh man, I should have deployed more capital. I have to follow my rules because it's my rules that keeps me profitable. Because what if it does this and it falls to the downside? Well, then you're going to be glad you followed your rules. Okay, that's when I'm like, ooh, thank goodness I followed my rules. Okay. Okay, so I can only share with you guys what I see here from a technical perspective. Let me switch the VWAP off over here. And maybe before I continue, guys, this can definitely get continuation to the downside, especially if volume starts to increase. If price, okay, can maybe close a couple of more candles outside. Maybe it chops here on the outside. The more candles it closes, the higher the probability becomes that you're going to claim the high. Okay. But if it just spikes up here and it falls back down, trades below the trend, that's usually where I just cut the loss. If I'm in a trade, I will just cut the loss because you don't want price action to start trading back below the trend. And this is just a strategy, D-line, which I refer to as the D-line strategy, which is basically a breakout strategy. And this was one of the first strategies that I used as a technical trader. And I now combine this strategy with other elements like Elliott wave theory, swing failure patterns. Okay, the most interesting trade that I was interested in this morning, and I think we front run that level, is a very interesting level that I'm watching for, and it's this naked point of control. Okay, I am very happy to miss this trade. Okay, and if it wants to fake out and fall to the downside and claim the low, this to me is a better trading opportunity. Because I know from probabilities and from backtesting the strategy, once you get the fake out, you claim the low, okay, then you get the breakout. And I want to catch it over there so that I don't have to contend with this risk. Okay. Smash up that like button for the education. Yes, it can get followed through, guys. You know, it's all up to your trading plan at the end of the day. Okay, I don't want anyone to say, Devil, okay, because of you, I didn't take the trade and now we're here at $75,000. No, you are in charge of your own finances. I'm just discussing with you how I approach the markets. And sometimes I miss trades purposefully because it doesn't fit my trading plan. And then I'll look for a short. I'm happy to miss this trade and look for the short instead of playing something that doesn't fit my rules. Okay, because I know it's my rules that keeps me profitable. I'm happy to miss a trade. Okay, right guys, but you know, there it is. This could definitely play out. I want to see what CVD is doing. Does CVD support to move here to the upside? Yeah, for now it's still fine. Let me just refresh it. Do we have Mark Dutch? Morning, Devil. Mr. Mark Dutch here in the house. Welcome to the live stream. I agree. 70k, then dump towards... Oh, wait, pump. 70k, then pump towards 80k. Yeah, we'll analyze the structure here in a moment. And I will also show you guys now, okay, from an Elliott wave perspective, what could happen here. Long or short, I mean, that is the question, right? We're creating a flag now. A flag. Well, which time frame? Which time frame? 15-minute? 5-minute time frame. Good morning, Mr. A Trader. Great to see you here. Smash up that like button. Yes, Always great for you guys to smash up that like button. Helps the YouTube algorithm. Mr. Nico, Devil, great to see you. Hope you're all well. Vikash, hello. Welcome to the live stream. And right, guys, so let's continue. 100%. And that's why I tune in, because I know your perspective is important and valuable. Thank you so much. I appreciate that. Ladies and gentlemen, let me, rephrase by just saying gents or guys. Ladies and gentlemen, the reason I have trading rules is because over the years when I developed my trading strategy, I very quickly realized that if I don't follow a rule or a couple of rules, okay, I bleed out my account, or I take too many losses, and then when I do win, I'm still in a loss because the wins are not covering the losses. And then when I started putting rules together and I back tested my strategies, so what do I mean by back testing a strategy? Simple, guys. So here on the 15-minute time frame, okay, this is what I used to do, and I still do it today to go and see if probabilities still play out. I click on this little reverse button, okay, continue, and I reverse the price action. Caution, bar replay isn't available with your current conversion. What is happening here? What is happening here? Anyways, guys, I don't know. I clicked something here now that messed up everything. Coinbase. For some reason, it jumped to Coinbase. Let's go here to Binance. Back to Binance. Okay. Start new. Okay. I reversed the price action. If you did not know about this feature, it's definitely a feature that you need to start using. How else are you going to know if your trading strategy works? How? You have to backtest it. Okay? And I think a mistake that a lot of people make when they start out, and I know there's a lot of experienced traders in this community, so it might not be relevant to you. Okay? But one of the biggest mistakes that a lot of people make when they start out is that they don't backtest their strategy. They just start trading based on current price action. So they forward test their strategies, but they don't backtest their strategies. So when I used to do the D-line strategy, okay, the D-line strategy, that's it, I will go and backtest it. I will reverse the price action, and I'll, for example, say, okay, now here's a little trendy trend forming, okay? Now, based on this little trend over here, what happened if I played the breakout? If I now press play over here, what happened? Okay, so I pretend to enter a trade. I keep a record of it on an Excel spreadsheet. I take profits when we hit the highs. I protect position. And based on how the strategy develops, I will build rules into the system. Okay, you have to backtest your strategy, guys. Okay, otherwise you won't know if it works. Anyways, you can see, yeah, this one actually played out. Now you can see, okay, you pause it, you're like, okay, I took the trade. Okay, I took the trade, price claimed the highs. That was my final TP area. I took profits, okay, maybe TP1, TP2. As price develops, you get out of the trade, you leave a runner if that's part of your strategy. Or are you that type of person that takes the trade every time and you wait to take profits at the highs? Maybe you take 10%, because I've seen this, guys. People take 10% profits here. Okay, they take 10% profits over there and they think, I've nailed it. I've nailed the trade. It's gonna go. Takes the highs, you take a little bit of profit and you get stopped out, because now you would have been stopped out with that little fall here to the downside. But it's always interesting for me to reverse the price action to a point where you don't remember what happened with the price of Bitcoin. Okay, don't cheat. You're cheating yourself at the end of the day. You mustn't cheat with the back testing. Okay, don't try and play a strategy if you know how price unfolded the last week. Okay, right, so let's take this back out. Let's focus on the current price action that we have here at the moment. And I mean, this is a teeny weeny little breakout that's happening over here. Okay, it looks like it's not holding. Okay, so the most important thing that needs to happen here is that price hopefully forms a higher low and it gets continuation. Okay, that's what you would want to see over here, a higher low. But for me, you know, if you close that 15-minute candle below the trend, it's already not looking great. Like I said, guys, I do not like a high volume candle, okay, that leaves a wick behind. Because when I back tested this strategy, I have noticed that every time I see a 15-minute or a 1 hour candle, depending on how big the trend is, and it has a high volume node and it leaves a little wick behind, okay, 7 out of 10 times, so out of 100, so if I do this 100 times and I see this 100 times, 70 times out of 100 when it does that, okay, it takes the low. So there's always a chance that it can continue, but I'm a probability trader. So based on my data, on my Excel spreadsheet, when I see that, I can still make a trading decision to say that, okay, I'm going to give it the benefit of the doubt because there's a 30% chance that this can play out, but I'm going to reduce my capital. So instead of going in with 5% of my capital, I'll go in with 1% of my capital, for example. And it's those rules that have kept me profitable as a trader. Okay, so now, ladies and gentlemen, I mean, you know, I'm just sharing with you a little bit of education on how I approach the markets. Right, so now I want to focus quickly on this little structure. Since this low, okay, to this high, what is cooking over here? Okay, before I get to that, so let's quickly look at it from a channel perspective. Where did I put my channel? There we go. So this structure on the 15-minute time frame, okay, let's just take that trend out. As a technical trader, I'm trying to figure out, was this the end? Or is it still going to make one more high and then lose the trend? It's basically going to lose the trend. Okay, so now based on Elliott wave theory, and this is now where my Elliott wave theory kicks in as well, is to say that, well, I can count a 1 and a 2 over here. And now this is the conundrum. Is this 3, 4, and 5? And it's done. And if this is 3, 1, 2, 3, 4, 5, you expect the correction, okay? Well, you expect the impulse to be finished. Or, now this is now the question that I am trying to figure out here is, maybe 5 is not done. 3 moves over here. And this is number 4. Which means that there's the chance to still make one more high. And now that presents a shorting opportunity for me, because after an impulse, it has to correct itself. And that is a trade that I want to take. I'm already in a short over here. I took that trade last night. Okay. Triple top here on the 5-minute. There was bearish divergence. And, you know, it's just a shot worth taking. You have that anchor VWAP. And I will discuss all of that now here in the live stream. So for this 5th wave to still take the high, number 4 is not allowed, well, should preferably not tap the bottom of the channel. Because when you have a 1 and a 2 from a channeling perspective, that is what creates the channel. You want the impulse to finish before you tap the bottom. Okay. So if price continues to move up, maybe it slices this 50% over here. Now what I like about this line is that naked point of control, okay, is at that level. That's the trade that I'm waiting for. Because I know that if price, let's say it creates now that fake out from the trend and it falls down and it claims the low, okay, it does not tap the bottom of the channel, I'm going to be looking for swing failure from that line. I want price to dip below, grab the liquidity, and it needs to start trading above. So I can get an entry over here and I don't have to worry about the trend. Okay. And then I know as soon as we claim the high, definitely a profit taking area, because that could be your 5th wave and then it rejects. Okay, so still looking for a short, looking for a long. If price just continues here to the upside, well, then I miss the long, but now I'm looking for a short. And sometimes you just have to wait for the market to show you what you need to trade. Okay. And right, so for now, I can also count a completed 5-wave to the upside. So if price continues to the downside, it then simply means that this impulse has finished. And you can now start a larger correction to correct the impulse. What you want to see is a higher low, and then you know the impulse is done and it can but then this move is a much bigger move. Okay, that's the difference for me from a technical perspective, that if price breaks down, taps the bottom of the channel, then I will label this the wave 5, and I will look at this as being the corrective structure for this impulse, which means that if price maybe finds support, remember what I said during the beginning of the live stream, it finds support, okay, and I enter along in this zone, maybe from a swing failure perspective, you know, there's a point of control in this range as well, okay, there's a higher chance that the next move up can be a little bit more aggressive than just a 4 and a 5. As also a bigger move for me to play from a profit taking area, so it changes the rules in terms of how much profits I take where. Basically just changes my trading plan in terms of how I manage the trade. Okay, so for the bulls, in the short term, you don't want to tap the bottom of the channel. If price does come back down and it taps the bottom of the channel, there's a higher chance that this was the end of your impulse, and you can count a 1, 2, 3, 4, 5. It's done. And now the question is this going to be corrective or is it going to fall down? We don't know. And there's still a lot of price action that needs to play out here, but myself and Andy will keep the community up to date. By the way, guys, if you want to be part of the community where I do spend most of my time, okay, DM me the word access, and there's my Telegram link just to show everyone, okay, and I'll send you instructions on how to join the community. And in a nutshell, this is basically how I plan to trade today. This is, guys, there's not much else left to say here, unless, you know, we're going to talk about a little bit higher time frame analysis here as well, is that I am looking for a long. If price leaves without me, I'm looking for a short. If price falls a little bit further to the downside, well, now I'm very interested in a long in this zone, because that's support. From a price action perspective, I'm sure you've heard these words a lot. Price action is the most important thing. It takes priority over anything else. Okay, so from a structural perspective, you have support. From a structural perspective, you have support. So I'm looking for a long, and I'm looking for a long. If I catch the long over here and it goes up, there's a high chance that you're going to take the high and reject again, because then you have a 1, 2, 3, 4, 5. If price breaks the channel and I find a long over here, it holds, the structure is corrective, maybe it forms a larger trend. It forms a larger trend. Okay, you can also play the breakout if you want a little bit more confirmation. I like larger trends. They're usually a little bit more reliable than just looking at a couple of candles that's formed over here. Okay, sorry guys, I know it's getting a little bit messy. So that is basically my trading plan in a nutshell. I am already in a short over here. You guys should know me by now, I've already taken profits from the short. My position is protected. So if I get stopped out of the short, I will get stopped out with profits. Okay, but then I'm looking for a short over here. Now here, okay, here is a very interesting level. There's a very interesting level in that zone. I spoke about it yesterday in my live stream. So let's zoom out a little bit now, because this is the 15-minute time frame, guys. Okay, let's zoom out a little bit. Let me clean up the chart, switch off the structures. Okay, switch off the levels. Let's zoom out here on the 4-hour time frame. When I take a fib from this little pivot that we formed on the 14th of Jan, okay, and I drag it to the bottom and across, there's a 0.382 that is almost tapped. Almost, but not yet. Now, I know that these large Fibonacci levels, okay, here on the macro, because that's a 4-hour, 8-hour time frame Fibonacci, okay, usually when you claim these levels, you get a nice little reaction. So I'm looking at this level, at this structure, and I'm thinking to myself, well, if this is a 1, 2, 3, 4, 5, well, that's an interesting area for me to look for a short. You claim the 0.382, you have a 5-wave move to the upside. Well, the minimum that I expect is at least a 3-wave structure to the downside, because this impulse has to correct itself and I can take advantage of that little move. Yes, it can get nasty. You can reject here and go and claim $60,000. That's why I leave a runner open, okay, because that could be the pivot. Okay, you claim the Fibonacci and you reject. Best case scenario is that price forms a 5-wave structure, a 3-wave corrective structure, and it gets continuation to the next level. Okay, because on the larger time frame, and this is how I bring things back into the larger time frames as well. So just to clean up the scribble, let's go here onto 8-hour time frame, just to show everyone this is what I spoke about yesterday as well. So in this, let me see where I saved it. In this scenario over here, okay, the minimum requirement for this B wave is to at least tap the 0.382. That's the minimum requirement, and you could still form a C wave here to the downside. So I know that this is an interesting zone to look for a short, because this could turn into a swing trade and claim $60,000. So part of my trading strategy is, the community knows by now, okay, Devil's in, he protected already, he took profits. Okay, just like I did with this trade that I'm in at the moment. Just want to see if I have it open here. Do I have my account open here? There we go, I do. Okay, let me see if I can swing it in here. Come on, work with me, work with me. Right, there we go. Can everyone see? Okay, so I'm in a short. I've already taken profits to cover my fees. And if price continues from here and to the downside, okay, I will take more profits, but I will definitely take a little bit more as price continues to the downside. But this could also be the high. Maybe it front runs that level like it's doing now, because I know that Andy also spoke about the anchored VWAP. Okay, for those of you that don't know about the anchored VWAP, you take it from pivot highs, pivot high. Okay, because the last time we had the anchored VWAP from that little pivot, that is exactly where we got the rejection. It was also the fib extension from the 786. When you take a fib extension, it was the 786. That is exactly to the dollar where the price got the rejection. Well, not to the dollar, from the 786 perspective to the dollar, but from a VWAP perspective, from an anchored VWAP perspective, if you zoom into the smaller time frames, there was some reactions over there. Okay, it gets messy, it confuses people, they don't know what to do, but overall you get a rejection. Just want to see, where did that play out? Was it here? Okay, let me take the scribble here out the way. Okay, this is on the Binance. On Binance, we actually just literally tapped that level on the 15-minute time frame, literally got a SFP. Okay, and this is the chart that I'm using here is the Binance perpetual chart. Okay, USDT. It's still the chart in the world that carries the most amount of volume, and that's why I use this chart to do my day trading on. Okay, so it literally SFP'd the anchored VWAP and it started falling to the downside. This also looked very corrective, and then all hell broke loose and it just started dumping to the downside. So you just never know what's going to happen. Okay, so I'm definitely holding on to that short that I'm in at the moment. So if we go back into the current price action, and guys, this is something that Andy also spoke about yesterday, is that we did swing the anchored VWAP. It's a little bit concerning that we didn't tap the 0.382. That it's just such a great level that I'm keeping in mind. So if price does still go and claim the high again, if it does go up here, I will be looking for a short. because I can get a better entry over here by using my swing failure strategy. With good risk management, protect position, price moves down. Okay, you want to see price move down. Okay, you want to see the rejection. Okay, but I know that I can get in here, and I will keep the community up to date if I do enter this trade and if it does play out. Right, so anchored VWAP has been claimed, and it can definitely form a double top. And I will be looking for that double top rejection. So the safest way is you want to see the double top and you want price to trade below that high and below the anchored VWAP. That is a sign of weakness. You know where to put your stop loss, and okay, and then it just becomes trade management after that. Based on the structure, it looks like it can do a couple of things. So based on this local structure, and this is why I'm focusing from this low to the high. This is why I'm focusing on this structure. Can it be finished over here? Yes, it can. 1, 2, 3, 4, 5. There's a 5-wave structure. Can it make one more high? Yes, it can. 1, 2, 3, 4, 5, as long as it doesn't tap the bottom of the base channel. So this is why shorts are so interesting to me here. I cannot, guys, for the love of me, I cannot enter along over here knowing that most of the move have already happened from a structural perspective. So the only long that becomes interesting is where I can get in like a sniper, and that is the point of control a little bit further down. Okay, here we go. So the only long that I am interested in is this one. And if it fails and it loses the level, not interested in a long. The next long I will be interested in is in this zone. Because I know it could fall aggressively here to the downside, and I'm already making profits from the short. This could be the end. Okay, but there's still the chance that after you have a 5-wave move up, price falls to the downside, you can form a higher low and get continuation back to the upside. So this is why I know that this is support. So depending on how price reacts in this zone, I want to see choppiness. Price needs to slow down like it's doing here. Price needs to slow down. So if it wants to fall, okay, it needs to chop. It needs to slow down. I want to see the bears running out of steam. I want to see bullish CVD against this pivot. So I'm going to look for signs of strength. No signs of strength, no trade from my perspective. No long. Then I'm just going to enjoy the profits to the downside from the short that I'm in at the moment. And that's basically how I'm planning to approach the markets over here. And I think it does also highlight what Andy spoke about yesterday in his stream. There is still the chance for a little bit of a double top over here. So I'm looking for a double top. Okay, I want to short the double top if we get it. If we get the double top, I want to short the double top. As long as price is above and it's smashing here above, no trade. I'm not interested. Because, you know, the market can do unexpected things, and I don't want to be on the wrong side of the market looking for shorts, adding to position, and it keeps on pumping here to everyone is talking about $85,000. I don't want to be that person that adds to positions and I get liquidated. Okay. Right, so now what I want to do is I want to zoom back here onto the 1 hour time frame, and let's just talk about this little structure that is formed over here. Okay, let me just switch this off, clean up the chart, maybe go through some comments quick before I continue. My Dutch love, Mariela, yes. USDT is king. Binance Bybit. Yes, I do find the Binance one. For me, I prefer the Binance one over the Bybit one. I've also, I took the anchored VWAPs on the Bybit chart as well. It doesn't work as great as the Binance one. Right. 100 likes. Let's go for 150. That would be absolutely amazing. Jane Street will come and destroy. What? Jane Street, what they do. If you don't know what they are, you should. Okay, cool. Do you consider the 74.5 tariff lows an important level? The tariff lows. Okay, let's go here on to the 12 hour. These lows over here. Was this the Yeah, these were the tariff lows. Wasn't this the tariff lows? I think these were the tariff lows. Yes, it can definitely act as resistance. Okay, because that's price action. Definitely can act as resistance. I'm trying to see something over here. Oof, you can see how close this one got as well. I'm just looking at this. Look at this. Okay, you have that little wick and you have that little wick. And I think they almost claimed each other, but on some exchanges they did. So you can see that price action, these little wicks, they can offer resistance and support. This one offered resistance. Price came back up and rejected. But it is great when price grinds into a previous area of resistance. For example, okay, let me just clean up the anchored VWAPs over here. Remember what I showed you on the smaller time frames, the 1, 2, 3, 4, 5, and those support areas. It's also when price dumps and it creates a correction. This is resistance. This is resistance. So if price continues to the upside, it's going to struggle to break through here. Okay, that offers resistance and it can fall down. So it needs to break above and flip it into support. That's basically the basics of support and resistance. You can see also here on the 12-hour time frame that you have the point of control inside of support. Where did price bounce? Okay, where did price get the bounce? On the point of control inside of this box. So if price, now I'm treating this the same way. So if price does find momentum here to the upside, it's a very interesting shorting opportunity. Okay, because this is now where price is reacting at the moment. But guys, you know, this is the 12-hour time frame. It's going to take long for things to play out over here. Let me just take these trends here out the way. Ding, ding, ding. Okay, so I want to go back here onto the 1-hour time frame. Now, from an Elliott wave perspective, okay, there's not really a lot of scenarios left here at the moment. Okay, so just in summary, if price does still find upwards momentum, I'm looking for a swing failure from the 0.382 taken from the pivot of $97,000. $98,000, this little pivot. When you take a fib from that pivot to the low, okay, and you have a movement to the downside and you have a corrective structure, 75% of the time you at least claim the 0.382. And usually these levels offer resistance. These Fibonacci levels by themselves offer resistance because you can even see from a price action perspective, and it never ceases to amaze me how Fibonacci is so powerful even from a price action perspective. Because if I take the fib from the high to the low, you have underbelly resistance over here from a price action perspective. The 50% has resistance from a price action perspective. There is a point of control and it aligns with the 0.618 over there. You have, look at that, support, price bounced, lost the level. So you can see 786, you have consolidation area over there. So you can see how these Fibonacci levels usually also aligns with price action from a support and resistance perspective. So I will be paying attention to this level. Guys, and it might not do that and fall. Maybe it extends a little bit, okay, and then it rejects to the downside. I still have other levels a little bit further up to that I'll keep an eye on. If I switch on my point of controls, my daily levels, my weekly levels, okay, this is where I pull out the big guns and I say, okay, well, what else do I have upstairs? If price shoots here to the upside, okay, and it doesn't reject, well, I still have a level that I can keep an eye on. That's where I can execute the trading strategy with good risk management, because there's a point of control inside of that consolidation area. Okay, so if it doesn't reject and do that, but I think it has a higher chance coming to this zone if it falls a little bit further and it then bounces. Then it has a higher chance to get to this level. If it bounces from here, the probabilities doesn't look great to go that high, okay, because then you're looking at a 1, 2, 3, 4, yeah, it's a very extended fifth wave to the upside. So I do take structure into consideration as well to say that, well, where it bounced, how high can, you know, what is the likelihood of how high it can go. But this, make no mistake, this is a very interesting level for me, the 50% as well. You have the 50%, you have this consolidation area, you have a naked point of control, you have a daily level. So if price gets really punchy here to the upside, okay, definitely a zone that I will be keeping an eye on as well. But you guys can see I'm very interested in shorts. Yes, I can take some scalp longs here to the upside, but for now, I know from a structural perspective, let me clean up the chart here. Okay, and I actually got a couple of comments from people yesterday saying, Deerwold, wow, you've opened my eyes. I never looked at the market like that. When you have momentum to the downside and you form a three-wave structure, you continue momentum in the downside. If I zoom into the smaller time frames, you'll see with every drop, there's a three-wave structure. You get the drop, you get a three-wave structure. You get the drop, guess what? For now, this is still a three-wave structure. So it doesn't matter how high it goes, as long as it remains a three-wave structure, it always has an increased probability of taking the low. And this is why I'm interested in shorts. If price continues to the upside, it slows down and it does this, and it makes one more high, so it does this. Then I will change my mind. But as long as it's a three-wave structure, okay, I can still make money from that move, even if it wants to make a five-wave structure. So for the bulls to take control of the market and reverse price action back to the upside, they have to form a 1, 2, 3, 4, 5. Okay, and this is something that I discussed yesterday in the live stream as well. So for anyone new, now you know. And for everyone that did watch the live stream yesterday, sometimes it's great to hear it again. Okay, power short, dev's gonna eat trash. Dev's gone eats trash. Okay, do you have any advice on how to avoid fake outs? Yeah, it takes practice, you know, and for me, the best way to avoid a fake out is backtesting the strategy and see how many times fake out happens and why the fake out happens. And then when you look at the candles, so for me, the best way that I've spotted fake outs is like I discussed in the beginning of the stream. Yeah, on the 15-minute time frame. Okay, not always, guys. 30% of the time, the trade does play out. Okay, but 70% of the time, for me, how I spot fake outs is I would have liked to see on the 15-minute time frame, I would have liked to see this candle close above the trend, the body of the candle. And the fact that it left a wick behind with, and that is your highest volume candle at the moment, okay, that's usually what gives it away for me that this could be a fake out. 70% of the time. 30% of the time it plays out. But I'm not going to play against probabilities. So there's a 30% chance that it moves up over here. But there's a 70% chance that it fakes out and it takes the low. So if I'm a probability trader, I can't go in here with a big position and say, I'm going to take the high. Let's go rock and roll. I can't. I trade probabilities. I'd rather miss the trade and look for a trade that has a higher chance of rejection. A 70% or even a 65%. Okay, I'm a probability trader at the end of the day. So for me, that is how I spot fake outs. But guys, you're going to have to go and backtest your strategy. Sorry, my voice is disappearing. Okay. Okay, let's try again. Yes, my voice is back. Testing. 1, 2. Right. So guys, let's go back here onto the 1 hour time frame. Let's just look at a couple of Elliott wave scenarios. So something that I wanted to check out together with everyone here is that let's just keep it simple. When I look at this structure that formed here, okay, the previous correction, because it looks very similar. Okay, look at this 3-wave structure. You took the highs, looked like it wanted to go. Also the anchored VWAP, it got the rejection and it fell to the downside. So what I wanted to do, and I wanted to do it last night and I didn't get a chance. I just want to keep it very, very simple. I want to take a fib, trend-based fib, from the low of the structure to the highest point of the structure to the lowest point of the structure and see where it got rejected. Okay, so not great, but you can see we got rejected here at the between the 786 and the 121 extension. So this was the rejection zone. Okay, now I want to do the same over here. Exactly the same thing, from the lowest point to the highest point of the structure to the lowest point of the structure. Where is price now? Also, it's now between the 786 and the 121 extension. So based on the previous movie that played upstairs, this is where previously price got the rejection. Hence, I'm very interested in a short. I can also treat these lines as swing failure lines. Okay, but now when you go into the nitty gritty and you actually know about Elliott wave theory, you know that the correct way to do this fib pull was actually a WXY. It was from the low to this high to this low. Okay, because when you do the counts inside of the structure, you basically formed a W, triangle X, and then you had your ABC here in a Y, and now you perfectly rejected at the 0.786. So Elliott wave theory does give you that edge. Okay, it gives you that little bit of an edge to know that, well, okay, you don't use the lowest and the highest and the lowest point. There's certain points that you need to use to get a more accurate trading opportunity. So now I want to look at a couple of scenarios that is still in play over here. So one scenario is a simple ABC. Okay, you have a wave in a 1, 2, 3, 4, 5, which means B does not have to be a flat. You have a 3-wave structure in a B wave. Remember, B waves always have to be 3-wave structures, so tick. You have a B wave, you have an A wave, and as long as momentum continues here to the upside, you're basically completing your C wave. So based on this berry structure, I know that it's still, from a swing trading perspective, it's more interesting for me to look for shorts. From a day trading perspective, I can long, short, I don't care. If I see a long, I'll take the long. If I see a short, I'll take the short. I'm a bear and a bull in the same hour when I day trade. But from a swing trading perspective, I'm more interested in shorts because I know after an ABC, there's a high chance you can take out the low. So I'm looking for a bigger move from a swing trading perspective. So can you guys see that you need to wear different hats depending on what type of trade you want to take? Day trading, I don't care, guys. I can enter a long here. Maybe I play the breakout. Good risk management. I take profits here at the highs. That's a day trade. From a swing trading perspective, it doesn't make sense for me to look for a long over here. Most of the move is already happened here to the upside, and I know it's already inside a rejection zone. Okay, so in this scenario, there's a couple of ways in which the scenario can play out. Okay, I just want to take, let's just leave that here for now. The most aggressive scenario here to the upside is a 1, 2, and now you're forming multiple 1, 2. So you have a 1, 2, 1, 2. Okay, maybe this is your 3, 4, 5, 4, 5. Maybe it does that. It does this grind because of this. I know there's also a way in which you can count this as a 1, a 2, and this is now your third wave forming here to the upside. But basically, it's a very interesting short. Okay, it aligns with this. You can see you chop to the upside, showing that the bulls are losing steam and you are grinding into resistance. So it's from a swing trading perspective, it's just for me technically the best area to look for shorts. Okay, there's another structure I know that can unfold over here. It can form a leading diagonal, but again, guys, leading diagonals never carry, or ending diagonals, any diagonal never carry the highest probability. So basically what's going to form over here is you form this. You have a 1, a 2, a 3, you do a 4, and a 5. But it's the same result. You guys can see as per the lower time frame analysis, I'm looking for a double top. So you want 5 to go up and start trading below. I know where to look for a short. I know where to put my stop loss. You have a 1, 2, 3, 4, 5. Ending diagonal carries higher probability than a leading diagonal. And the meaning is in the name. An ending diagonal means it's the end. This is the end, and it's going to come and take the low. A leading diagonal means that this is an impulsive structure. It makes a three-wave correction, and it continues to the upside. And an ending diagonal carries higher probability than a leading diagonal. So very interesting. If price does do this and it rejects, it starts trading back below this high. Okay, that's a sign of weakness. That's a sign that the bulls are running out of steam. I will be interested. So I will get stopped out of the short that I'm in right now, but I don't mind having a better entry upstairs. Okay, and that also aligns with that. I think I did put it in here. Guys, I'm very interested in that macro 382 that I've shown everyone. I actually marked it out as a level. Okay, I'm very interested to see how price is going to react at this level because I know it gives me a better entry. A little bit further up, I want to see if I do have a level there. Okay, I have that point of control that I also spoke about. The only rule, the invalidation for that fifth wave, okay, this is the invalidation, is it's not allowed to be longer than your third wave. That's the invalidation for the scenario. So this scenario has two invalidations. First invalidation is if price continues to the downside, it should not lose, okay, and form a parallel channel. It should not do that. If price continues, and now you have a parallel channel, I don't even look at it anymore. I know you get expanding diagonals, but they are extremely rare. Extremely. I have never seen an expanding diagonal on the larger time frames on Bitcoin. I know about one that is under dispute, and people are arguing, Elliott waveticians are arguing amongst themselves whether it's expanding or whether it's a corrective structure. That's how rare they are, guys. Expanding diagonals are very rare, and and I'm specifically referring to the larger time frames, 4 hour, 1 hour up. Okay, you basically form a 1, 2, 3, 4, 5. So you get a trumpet. You get a trumpet structure. They are extremely rare. I have seen them play out on the 5-minute time frame, 1-minute time frame. I have seen a couple of them, but they are extremely rare. Okay, and that's why usually if price had to fall down here and now it's an expanding structure and then it gets a bounce, I will look at something else. I will not even look at expanding structure, because every time I've seen someone talk about an expanding diagonal, they get invalidated and it turns out to be something else. Okay, so guys, smash up that like button for the education. Let me just fix my mic over here. And right, so let me get back to the rules. So the structure needs to remain contracting. Can you see contracting? It's contracting towards each other. Okay, so in this scenario, you want to see a 3-wave, okay? And you want to see a 3-wave up, maybe this point of control at $76,000. 147 is a very interesting level as well, together with this, the 0.382. Okay, but you want to see weakness in the zone. You know, if you want to swing trade, you have to give, for me, I go in low leverage. Okay, I lower my leverage that I use for day trading, and I deploy less capital because I'm looking at a bigger move. I don't have to be as aggressive as I am from a day trading perspective. From a day trading perspective, I can be very aggressive because my stop losses are tiny and I lose the same amount as I would lose for a trade like this. So I can give this stop loss a little bit of breathing room. I can give it $4,000 breathing room, and I can still lose the same amount as I lose with my small little day trades inside of here. Okay. Right, so your invalidation I've explained for the 4th wave. You now know what the invalidation is. Another invalidation is the length of your 3rd wave. Okay, it's not allowed to be longer. But now I need number 4 to be done in order to show you the level. So let's just put it here, just for argument's sakes. Let's just put it there, okay? You do not want price to tap the 1-to-1 extension. That's your invalidation for this scenario. 1, 2, 3, 4, 5 invalidated. Then you're looking at 1, 2, 1, 2, maybe you get 3, 4, 5, 4. So then the structure turns into something way more bullish. Usually, most often, where your fifth wave rejects is the 0.618 and the 786. That's where the fifth wave rejects. So whenever I've seen a leading or an ending diagonal, even a leading diagonal, that's usually where the fifth wave rejects. Okay, the minimum requirement for the fifth wave is to take the high of 3. That's the minimum requirement, and I've seen this movie before, where the fifth wave did that. I've seen that movie before. I'll show you now where I saw that movie. 1, 2, 3, 4, 5 did not claim the minimum target, and it fell down. And then when you look at Elliott wave theory, the minimum requirement is that 5 takes the high of 3, which it did. So if you go onto the daily time frame, where have I seen this before? Not so long ago, okay, when you look at this structure. I think it was this one. Oops, grab the trend. Okay, there you have a leading diagonal, potential leading diagonal. You have 1, 2, 3, 4, and guess what happened there? You literally just took the high. And then when you measure it out, the 0.618 was over there. So it technically, from a textbook's perspective, it did what it was supposed to do. The 0.618 is usually a minimum target and a preferred target, okay? But it did what it needed to do over here, and it got the rejection to the downside. Okay. Right, so guys, it's always nice to back it up with examples as well, as to say that, you know, I'm not just showing you guys a structure that you've never seen before. These things play out all the time on Bitcoin, on commodities, on the Nasdaq, on gold, on silver. They play out everywhere. Okay, most bullish case scenario, I don't even know if I need to talk about this scenario. Okay, bearish scenarios for the moment still carry the highest probability until proven otherwise. Right, so most bullish case scenario, I actually made a short about it, is basically, in a nutshell, you have a 1, you have a 2, and you want to see continuation to the upside. It's still an interesting shorting opportunity, because after you form a 1, 2, and a 3, you still form a 4. So there's still a short for me, but if it does that and takes the high again, then that's where the bulls will start gaining probability over the bears. 1, 2, 3, 4, 5. That becomes interesting. And that now shows that the bulls are starting to win the fight against the bears. But you need to see that. Until that, I'm shorting. Until I see that. Then I'm going to be like, okay, there's still a short. Definitely that's a short. Because after a 5-wave impulse, the structure has to correct itself. So there's still a correction I can play. But then it becomes an interesting longing opportunity. After a 3-wave structure, well, there's always the chance to take the low again. Okay, so that's basically the most bullish case scenario, is that price continues here to the upside. The one thing I do need to point out, Devil is the man, very clear and intuitive explanations. Thank you so much, Psycho 1985. Don't give away your birthday, okay? Are you, what are you, 40 years old, 41 years old? Okay, so what did I want to say? Oh, the one thing that's concerning for me at the moment, okay, is that price is pushing up with decreasing volume. This is not what the bulls want to see. You're pushing up, you're breaking levels, you took the high, and volume is decreasing. It's not great, guys. It's not great for the bulls unless something can happen, price starts extending and volume starts to increase. Then I'm going to say, okay, now that starts to look interesting for the bulls. Retracements becomes very interesting longing opportunities, okay? But volume is decreasing still at the moment. So this zone for me is just screaming short at the moment. And I know the market makers are not going to make it easy to get in. Okay. No, that's basically what I wanted to discuss. I just quickly wanted to touch on oil. Okay, I did say, guys, I'm going to start doing a couple of commodities. Okay, I'm just going to look at oil and gold. So first thing I wanted to point out here on the daily time frame, just to show everyone where my mind space is at. So there's no trade for me at the moment on oil. Okay, I'm keeping it super simple. Okay, you have broken a downsloping trend here on the daily time frame. So since the 4th of March during 2022, oil has been on a downtrend, and now it has shifted momentum. Finally, and you guys can see that I've been tracking the momentum inside of this zone as well. Okay, and it seems that oil really respects the D-line strategy exceptionally well. So you can see that we have support, and price is now smashing out of the it used to be resistance. Okay, it now smashed out of the resistance. The next area of major resistance is here around $84. $84. That is where I will be looking for a short if it does come to this level, because you can see that this level has been well respected, because this is where it can make a pullback for a longing opportunity. Okay, so there's a short and a long. If I go here onto the 4-hour time frame, and I don't really want to go smaller than the 4-hour time frame because I want to do swing trading on here, you can also see, you know, how well, if you wanted to catch the breakout before the breakout, well, there was your breakout. But now what's most important is that I'm tracking this momentum here to the upside, and it's very, very aggressive. So a buying opportunity for me is if oil falls down and it flips resistance into support. So it's broken resistance, but it hasn't come back for retest yet. So if oil comes back for a retest, which also aligns with your trend, that is my buying opportunity. If oil continues to the upside, that is my shorting opportunity. And then maybe it comes back down. Short, long, or it falls down, long. This is how I'm planning to, very simple, guys. Just, you have resistance, you have support. You have a trend, it can come back for retest, and it can go up for continuation. And this, you know, and I might have to wait weeks before I can take this trade. Okay. Right, I have taken the liberty of going here into the smaller time frames, okay, just to see, well, was there a breakout or something that I could play over here? And you can see, well, okay, the chart becomes a little bit messy the smaller the time frame becomes. So I don't really want to trade oil on the 1-hour time frame. I prefer to trade it on the 4-hour time frame, which means I'm going to have to be a little bit more patient for my entries. But I just wanted to see if the strategy is being respected here on the smaller time frames. Okay. So, I mean, it's moving up very aggressively to the upside. It has broken trend. It came back for a retest. That was a buying opportunity, by the way. Okay, because I know when I call it price comes back home. It pumps, it comes home. It pumps, it comes home. That's what forms the trend. And whenever price pumps and it comes back home, that is a buying opportunity. It pumps, it comes back home. Then it started forming that trend. It pumps, it came back home. That was a buying opportunity. Okay, but it's a very, I don't want to trade it here on the 1 hour. Okay, if you want to trade it on the 1 hour, that's completely up to you. Remember, guys, I'm only sharing with you how I approach the markets. So the most interesting trades here on oil that I'm looking at is, you can see on the 4-hour time frame how steep this trend is. It's extremely steep. Okay, I'd rather wait for a short, or I'd rather wait for a long. And wherever it goes first will activate my trading opportunity. Okay, let's quickly jump into gold. For now, gold is holding momentum. For now, gold is forming locally higher highs and guess what? Higher lows. And until gold claims this low, the bulls are still in control. Gold is currently holding the value area high. You can see there's massive volume in this region as well, which acted as resistance. Okay, you broke out, you retested it, now you retested it again. It's trading above. So as long as gold can hold the momentum, it can still get upwards momentum. So for me, here on the price of gold, it's still in my best interest to look for longs. That was a buying opportunity. So I missed this, so there's no trade for me at the moment on gold, unless it breaks that trend, which I will be tracking. So maybe it bounces, I can get in over here, or it continues, and I can play the breakout to go and claim the high. So that is basically how I'm approaching oil and gold here at the moment. Okay, for the bears, well, gold needs to take this low to start changing structure. If gold loses support, breaks the trend, flips it into resistance, loses the low, well, now you're forming a lower low. And then it is that retracement that becomes a shorting opportunity. So let's see how this plays out over the next couple of weeks. Okay, right, and that's basically what I wanted to discuss on oil and gold. It looks like this breakout is actually playing out. Looks like it's actually playing out. I want to see if there's some bearish CVD forming on this movement here to the upside. Yeah, it's already forming bearish CVD, but it can still get follow through. Okay, it can still get follow through, definitely. But yeah, guys, you know, it's like I said, and I'm glad I said it, is that 30% of the time it happens, it breaks out, it goes. Okay, and this is now, it looks like this is now one of those 30% of the times it happens. But I'm, like I said, guys, I'm happy to miss this trade. I'm more interested in shorts. Okay, double top, you know, even if it double tops and it swings the top, okay, interested in a short. I'm happy to miss the long because it didn't fit my trading rules. Okay, and remember, you have still not claimed that high, so there's still a chance that it forms a lower high and it breaks down, and then you have a lower high over there. So, you know, if you do take these, or if you did jump into this trade, remember to take profits, okay, manage risk. I can only tell you what I would do, okay? I would have already taken profits as soon as we hit resistance. Okay, you can see how it got the rejection. It's now continuing. You have another profit taking area, another profit taking area. That's just how I basically approach the markets. But guys, I was very happy to miss this trade based on what I saw over there. I just have to stick to my rules, and sometimes the low probable scenario plays out. But I'm very interested in shorts. Okay, BTC punching. Yes, BTC going to another high. Yes, it is going up, and institution is searching devil to explain the tricks what they made. It's about to turn around and dump. Yeah, guys. So I'm not sure if I should share this tip of the trade, but I will share it with the community, guys. If you want to know and see what I do from a trading perspective, remember, link is down in the description. DM me the word access. Okay. On Telegram, that's my Telegram link, and I'll send you instructions on how to join the community. So that's where I spend most of my time. So I'll most probably jump into the community. I know Andy's doing updates today as well inside of the community. Most probably posted a couple of scenarios, some shorts that he's looking at, and you know, we'll keep the community up to date in terms of what I can do. You know, is all I can do is just share how I trade. Guys, I've jumped into a long. This is why I'm jumped into a short. I've protected position. So I do share what I do from a trading perspective with the community as well. Have yourselves an amazing day. Thank you so much for joining the live stream. And I will see you all tomorrow. Have a great day. Until then, cheers for now.